Low interest rates, strong demand, and high commodity prices have been good to many sectors of farming in the last few years. But economists with the American Farm Bureau say it's possible ag's best years may be behind it. The Billings Gazette reports AFBF economist Bob Young made those comments speaking to Montana Farm Bureau's annual meeting. He says growth for U.S. ag has been unprecedented, with farm income growing from $275 billion in 2003 to $425 billion the last 3 years. Young says, however, he expects ethanol demand to remain steady as gasoline usage falls. Interest rates will have to rise at some point, and he expects rising demand from China to eventually slow. All combined, it makes for a more modest picture of farming going forward. Now, with corn prices at about half of 2012 prices, net farm incomes will take a hit in 2014. Tyne Morgan talked with one lender who watches these prices very closely. She joins us from Kansas City, where the nation's farm broadcasters are meeting this week. Tyne?
Clinton, what a difference a year makes. Last year when we were at NAFB, we were coming off the drought of 2012. We were looking at high commodity prices and record high net farm income. Well, this year things aren't looking quite as good, but I talked to Farm Credit, who says things aren't doom and gloom just yet.
We've been at record levels, and so coming off 20% of all-time record in net farm income is still going to put us at nice levels of net farm income. Now that's going to shift a little bit. Some of that's going to go from the grain sector, where it has been, back into that livestock segment that have really been having more challenges recently anyway.
Stark says agriculture still has a lot of cash flow to absorb some of those lower prices, but he says it's never too early to start looking at 2015.
Now is the perfect time to make sure you've got an appropriate amount of leverage against your real estate assets. And, we got interest rates at all-time lows, so you can lock in some really long-term fixed rate rates. Preserve that working capital. And so if you take a little of the equity out of your land to preserve working capital to help you through tougher times or to take advantage of opportunities going forward. So you have that, and then I think producers have to really watch their cost of production.
He says farmland is still a premium, and so we won't see land prices retreat off those highs just yet. He says it'll take about a second year of marginal income before we see a correction. Reporting from NAFB in Kansas City, I'm Tyne Morgan for AgDay.
Thanks, Tyne. Speaking of land prices, the Chicago Fed released its latest land values figures for District 7. That includes Indiana, Michigan, Illinois, Wisconsin, and Iowa. It found farmland values in this region gained 14%. Now that's looking at this year's third quarter compared with last year's. The largest gains were in Indiana and Michigan. Most states in the region saw gains in the third quarter alone. For instance, land values in Michigan went up 5% from July to October of this year. Most parts of Iowa, however, actually saw prices fall.